What's going on, guys? Happy Monday. So we're going to take a quick little intraday look at Nvidia. Currently, it is 10 a.m. Pacific Standard Time. So overall, the tech sector, a lot of mega cap stocks, amongst other stocks, are getting a really good little dead cat bounce today. So we had very aggressive selling, to end the day on Thursday. We had aggressive selling pretty much all day on Friday. So, this is to be expected. Just a quick message to, newer traders. Anytime you have extended selling like we did on Thursday and Friday, these kind of green days and these kind of rallies are to be expected. That doesn't mean that we're going back to where we were Monday, Tuesday, Wednesday of last week. It doesn't mean that we're going back to all-time highs. Now, could this be a start? Of course, there's always a start, but as we've seen in 2022, all good things are sort of getting faded, meaning that we might get 1, 2, 3 days worth of buying and stocks are rallying higher, and then one news headline, something from the Fed, something comes out and it kind of pulls the market back in. So I think right now we're kind of trading within this very wide range on the triple Qs on the Nasdaq 100, and that range is, as big as it is a range, and it's 335 all the way up to 365. We did actually, try to reconfirm that 200-day moving average on the Nasdaq 100 triple Qs. We were immediately rejected. And then we had those 2 days worth of downward selling pressure. So, is there opportunities to make money scalping, day trading in this environment? Absolutely. You just need to understand where your levels of supply and demand are. Because if you don't really know, you could be essentially buying the top of the range that's going to get faded back into demand. And just like if you're trying to short as we're coming into demand, you could quickly get bounced and squeezed out of your position. So what we want to take a look at here in the video, you can see this green box I've had here for a while now. I think it's, going back 2 weeks. This is a heavy demand zone. You can see going back a week or two, every time we kind of came down in this range, we've either consolidated or we've bounced higher, right? So if we look at what Friday's price action, we got back into this demand, and then we kind of had a very nasty pre-market overnight session from Sunday into Monday. And then essentially, as soon as pre-market opened, we had that gap down, and then everything pretty much just recovered. And now we're working our way out of this demand zone. So as we work our way out of this demand zone on Nvidia, the levels in the sand that we really need to take note in, if you're looking to short something on Nvidia, you can see here every time we've come into the demand zone, we've held. We've held. Now, this pre-market session, we actually broke below it. So what I want you to really focus on here to the downside, 230, 229, if Nvidia starts to give up 229, 230. Now you have to keep in mind, Nvidia does have earnings coming up very soon. With that taken into context, this thing can completely explode 20%, go down 20%, stay flat. We don't know. I don't play earnings. It's kind of like a crapshoot. Do you believe in the company long term? Of course, I think everybody does. But the way that the market is kind of maneuvering right now, it's very hard to just kind of take a stab. There's other ways that you can play earnings, straddles, strangles, however you want to do it. But you're going to need a pretty extensive move on either side to really benefit from that. So if we just kind of take a look at where we stand, 230, 229 is our absolute line in the sand. If Nvidia is to lose 230, I will be taking a short position, as we do have a lot of room down, 220, 215, somewhere in that vicinity. If the market is going to put in another leg down and get into a deeper correction, that's going to be a perfect opportunity for you to take a short position. Now, being that we are in the middle of this channel, we're in the middle of a range here, we do have resistance supply at 261 as well as 269. So 269, 270 is the recent highs here. 261 has been acting as a level of resistance in the past. It's always giving us a little bit of trouble. What we want to look for going forward is we can't just necessarily buy this first move, right? Because if you buy this first move and we get some sort of market weakness or some news, and you buy in the vicinity 245, 248, and we start to roll over, you can quickly lose 5-6 points very quickly. Now Nvidia is up 6.5 points, 3% on the day, currently trading at 246. If you're looking for a scalp position long, what you want to do is, if you look back to this price action here, you're going to want to clear this price action out, right? This is a channel here. So if we kind of take a look to where that's correlating, we're going to want to really get over 251 before we think about getting long. Now, that is still 5-6 points away, but I'd rather wait for that confirmation than to jump in here and have it sell off. Here, even though we have had a nice, decent move on Nvidia today, there's no real macro trade. Now you're going to have a scalp here between 248 and 250, 248 and 251. You're going to have a little bit of area of opportunity to make some money. But again, this is for experienced traders, people who understand risk. You're not going to go all in on your sizing. You know, if you're normally trading options and you're trading 5 contracts, maybe you're going to want to trade 2. You know, normally if you trade 2 contracts, maybe you're going to want to trade 1. You know, you're definitely going to want to give it a little bit more room to wiggle just due to the volatility up and down. You're going to get stopped out very, very quickly in a market like this that is chopping around a lot up and down, up and down. So with that being said, you're going to give yourself more room for the stock to move up and down, but we're not going to go in with max size. So I'm not going to let this stock move up and down 3-4 points on me if I'm trading 10 contracts. Now, if I'm trading 2 or 3, now I've taken some risk off the table. I can allow this thing to move $2-3 against me in either direction, but as long as we're holding macro levels, whether that be support or underneath resistance, I can still kind of stay in the trade and manage it accordingly. It's a different type of trading environment where in the past you've been able to maybe just buy something here, and yes, maybe we dip, and 2 or 3 days later we are busting up over the top. You know, we've never seen a market like this, you know, unless you've been trading for over 8, 9, 10, 12 years, going back to 2007 to 2009, you have not seen a market like this. Even the COVID March 2020 correction was not like this. That lasted maybe a month and a half. Stocks found the bottom, and it was just a year-long rally straight up, right? So to say that you've seen this type of environment, if you've been trading for under 8, 9 years, is you know, is really, really foolish. You know, 2018, we had a little bit of a correction and a pullback in 2018, but again, different type of price action, different type of volatility that was going on with the way that the stocks were trading. So again, just to kind of keep things clean and simple, 248 is going to give you room to 251. Anything over 251, we have room to 260. To the downside, your big macro trade, I think we're going to want to just stay put, stay patient. Let's wait for 230 to confirm to the downside. We know we got a lot of room here with another leg down on Nvda. Guys, I hope this video helps. If you want to, please join my Discord. That link is down in the description box below. Also, subscribe to my channel, and I will see you guys all on the next YouTube video.